Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. On Friday, most of the developments for the day happened overnight and early in the session as we broke from this intermediate range uh, uh, area that we have over here. We gap up and we continued up towards the 3000 area. That happened overnight and within the first few periods. Now, what is more important, I think, to highlight on the Friday session, which was all about the expectation of the trade talks, is what didn't happen. What didn't happen is we approached the 29.94 level, which is exactly the high from the 1st of October. It also happens to be last week's or the previous week's high, and that level was tested to the tick and could not be taken, not even one single tick. So that's very meaningful, number one. Number two, the market closed in the lower part of the profile, below 29.80. That's a very weak close. And as we will see in a second on the market profile, there was a lot of liquidation towards the end. Well, you can see it here on the 30-minute. You see a little support here at 29.66 area on the overnight, tested a couple of times. Then the market opened regular trading hours, pro higher, then some speculation, some news came. The market flushed down and bounced exactly from that area towards the high again, and this time we couldn't reach the high and there was liquidation at the end. So that's a very weak close. The market seems to be disappointed at what was achieved on the trade talks. It was not straightforward negative, but I think the market expectations were for more things to be agreed. And the only thing really meaningful that we have so far is that the October 15 tariffs has been suspended. There's an extension, but I mean the market is pretty well aware that there's another round of tariffs scheduled for December, and that together with the fact that there weren't a lot of detail about what the Chinese and the U.S. Government agreed makes the market very uncertain, and everything that was built into this positive result rally, a lot of participants had to liquidate towards the end to avoid carrying risk over the week, and not only profit taken but also a little bit of disappointment. So last week we didn't have a change on the larger time frame. We traded within the previous weeks. The month continues where it is, and on the daily, yes, we had the extension, we had the break from the top of the range, and we had a gap up, but we take that with a pinch of salt because the high is very telling. Although it's weak, it's exactly at the level, it couldn't take it, and with that gap up impetus, and actually you have some back end filling on the G period, and not being able to take that high towards the 3000 area, that tells you that maybe the upside is not that strong. Paired with the weak close and a lot of liquidation, I'll be very cautious into the new week. So looking at the market profile, we have a zoom version of that chart. You can see how you open and immediately drop higher, tagging that October 1st high. Then some news-induced flush down was bought exactly from that level, protecting the gap that was holding there at that time. And after this went back up, at this point, if you have this type of response, the chances are that you're taking this high. If you don't take this high, that means that something's wrong. And that's exactly what happened. You can see how when the volatility started to go high with the Chinese delegation at the White House and already very close to the market close, you couldn't approach the high. You can see it here. If I zoom in a little bit, you can see that you couldn't get to the 29.94 level, and the market started liquidating when some details were disclosed, and it was not as good as the market was expecting. Nonetheless, We left excess on the downside. The gap held, and we couldn't get back below the 29.59 key area. But that remains the focus for Monday morning and for the week ahead, which is to assess continuation from this late liquidation break. If you get acceptance within, you need to monitor. I will take this particular profile as a balancing range, because that's what it is. You can see a lot of back and forth swing waiting for the news, and it is an area away with a lot of participants betting on this area on both directions. So if this holds, that's in theory positive for the market, but if this holds, you should get an extension. Now, if you get a lot of acceptance here, but you start pushing to the downside, there's a chance that you will attempt to close this gap. Now, the most bearish or negative scenario is that you open below this gap. And that's what is normally known as an island day, because basically, if you open down here, you will be rejecting right away the value established on Friday. If that denotes change, what you need to look at, if you open below that gap, you have excess and excess, and you don't push up quickly, that's a very weak market. So you need to pay attention to that possibility. But we are jumping too far ahead. The overnight, we will see what the overnight brings. I usually tweet in the morning an update, including the overnight, a little bit of the overnight information into the picture. But as I said, the focus for to start the week is to assess continuation from this late liquidation break. If you get acceptance above, that rejects that liquidation and brings the 3,000 area into play. But I will be more interested in if something negative happens. At the moment, there's a little bit of a negative sentiment with the situation going in with Syria and Turkey. That could play as well into the market. And if you look at this daily chart with the market so bullish and positioned very well to the upside, if now you have a lot of negative information, it could crash really hard. So I will be looking at the open. If we definitely open below the range from Friday, my focus will be where do we move with directional bias. If we open down here or down here with directional bias to the downside, that's a very weak market. Because remember that you also had a very prominent POC on Friday, and normally that's retested on the next week/session. So if you open below this and there's no revisit of this, that's a potentially weak market. So look for that. The market will be also looking at more details to be disclosed from this trade talks that happened last week. And also we pay attention to what the Fed may say about what they will or will not do. So make your plan for the week. Make note of your key levels, your key areas, and your key risk management strategy. Trade well, be cautious, and have a nice week.